Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the FANG stocks. So we're going to look at Facebook, Amazon, Apple, Netflix, and Google. Okay, so first up is Facebook, and yeah, so this has been severely punished. As everybody knows, it was down another 3.3% on Friday. It broke below the 160 level, closing at 159. If you look at RSI here, you can see it's at 29, so it actually closed below that 30 oversold level for the first time in many months. This is an 11-month, this is a 1-year chart here. So yeah, you're looking here now at Fasto, and you can see Fasto is down here at 1.37, and so previous drops down here on Fasto have signaled bottoms. You can see down here. Here's another circle. Yeah, down here at bottom, and then it came back up to the middle Bollinger Band. And then you had another bottom over here in May when Fasto hit this level. So this is an extreme oversold level. Usually Facebook tends to bounce. Now this could be an anomaly with what's going on, and it could stay pegged under 20. We'll just have to see how it plays out. Usually this is a setup for an oversold bounce condition. As you can see on Friday, the share price dropped below this blue line, which is the 300-day simple moving average at 162. And so that's the key level to get back above. It'll signal a major downside risk if the 300-day simple moving average turns into resistance. It needs to get back above that level, turn it into support, and then close above EMA4 at 165.52. Once you finally see a close above EMA4, that should be your signal that, okay, yeah, it's starting to reverse, and then it would have to work its way up here to the EMA 8 and the 200-day simple moving average at 172.78. Those are the big levels. Now, if the 300-day simple moving average remains resistance, when it stays below 160, the next target below would be this gap. There's a gap back here in July between the high of day on the 11th and low of day on the 12th, and so a drop down here into the 155s would fill the gap. So they might try to do a gap fill and then a bounce. We'll have to see. Today's candle did close well. Friday's candle closed well below that lower Bollinger Band, currently at 163.44. So that close at 159 is well below the lower Bollinger Band. Many times the candles will work their way back into the bands, and so similar to right here, you can see this red candle closed below the purple line, which is the lower Bollinger Band. The candles work back in. Same thing here. They bounced here. You could see here that the close below, the candles worked back in, and so yeah, so generally that tends to happen. So this is showing you that Facebook is in an extreme oversold level. You can see the MACD down here is pegged down to the bottom, at negative 3.7, negative 3.1. This is an extreme move to the downside, just like an extreme move to the upside can signal that a top is coming soon. An extreme move to the downside is a signal that you should be expecting a technical bounce sometime soon. Now notice the giant volume behind this move. All right, so the volume did decline heading into the end of the week, and so that would usually show that sellers are tiring. The last hour of the trading day, the mutual fund retail sell orders came in, and there was 1.8 million to sell on the close, and so that's what really got the downside going. Facebook, there was a bounce happening for the markets, and then all of a sudden the sell orders came in, and it took everything down to extreme levels. If you look at the Facebook 15-minute chart, you can see here that it's riding below the middle Bollinger Band. That's this dotted purple line, and so what it needs to do is it's got to get above EMA4 first. That's at 160. So if you see a break above 160, that's going to be your signal it's heating up. And then once it gets above 162.37, that's the middle Bollinger Band level. It tried to do that on Thursday, and it failed to, and it pulled back. If it can get above that level, that's when you could see a run up here to the 50 and the 100 simple moving averages. It has to get above that 100 simple moving average at 166 to really get a reversal going. Back on the 21st, when it had that really strong push, it had a really strong push, and then it hit that 100 simple moving average resistance level, and that's when it pulled back. And so a break above that 100 simple moving average on the 15-minute chart should be a clear signal that, okay, things have changed, and now it's starting to look bullish. It could make a run back up to this 200 simple moving average at 173, and that's lining up with retesting that resistance level from the the 19th and the 21st. And so yeah, so basically, Facebook will be a risk to hold long if it's forming candles below the middle Bollinger Band and the 50 simple moving average on the 15-minute chart. It needs to turn both those levels into support to get that reversal going. You might want to wait until it gets above that 100 simple moving average at 166. You would miss a lot of gains in between, but you could save yourself from if they pull the rug out again. Because if it doesn't get back above 162, if you get a bounce tomorrow and it starts running up and it hits that 162 and stalls out, it'll signal that the bears are still strong and there's still a downtrend. It has to get above the middle Bollinger Band to get that reversal going. Okay, let's look at AMZN here. This is Amazon, and so yeah. So once again, so you have RSI that's now below 50. 50 had been holding, and so this is a signal that the chart is cooling down. Now if you look at Fasto, it's way down here at 0.16. I mean, this is an extreme oversold level. You have to go back here to September and then August and then July of 2017 to find previous levels. Amazon hitting these levels on Fasto. This is an extreme oversold level. It doesn't happen very often, a few times a year. And in the past, it's turned into a buying opportunity. If you could see here in July, it bottomed out and then a nice run followed. And then if you could see here in September, it bottomed out with the Fasto pegged to the bottom and then a nice run followed. Now the anomaly here on all these charts is August. And so in August, you could see Fasto stay below 20. And it struggled for a few weeks. Now is Amazon going to do the same thing and struggle for a few weeks below 20 now that it's below that level, or is it going to get a snapback rally like it has on previous occasions? That's going to be the thing. This August pullback is on all the FANG charts where they got below the middle Bollinger Band on the daily chart, they got below the 50-day simple moving average, and they traded sideways to down for multiple weeks before they got going again. And so basically, the difference here on this time around is that the share price is above the 50-day simple moving average. Okay, it's above the 100-day simple moving average. Currently, Facebook's trading above all the moving averages except for the middle Bollinger Band, which is the 20-day simple moving average, and EMA's 4, 8, and 13. Those are the ones that we follow. And so it's currently, as long as that 50-day simple moving average holds at 1454, it's still in a bullish uptrend. It's basically it could start a downtrend here if that middle Bollinger Band at 1548 turns into resistance. So that's a really big level on the chart. If it fails to get back above that 1550 level, that's going to signal that Amazon is starting a downtrend. And then you could see that 50-day simple moving average tested. Now, that was tested back on the February drop and it held. If you see a drop below the 50-day simple moving average, that's when the chart's going to really be broken. And if you could see back here in August, that's what happened. See the green line here? That's the 50-day simple moving average. That drop got the close below, and then it turned into resistance, and that was the major downside risk. And so that's how you're going to be able to tell here if FANG is toast or if it's going to have a technical bounce. Remember, we have first quarter earnings are going to be coming up here very soon. So and earnings are supposed to be very good. And so so we'll see if it can hold that level. If it does, and get back above the 50-day simple or the 20-day simple moving average, then it could continue that uptrend. If you look at the 15-minute chart, you can see here it really struggled out on this 200-day simple or 200 simple moving average resistance level. That's the red line here. It's currently at 1564, and now you have the 300 simple moving average above. In order for Amazon to really get a reversal going, it has to get above all these moving averages and then now get back above that 300 and turn it into support. Okay, just to start the bounce, it needs to get above EMA 4 at 1502. Okay, that's the big level. If it can get above that, then it's the middle Bollinger Band at 1517. And notice how that's lined up with the top of this downtrending channel. If you see Amazon trading, 1520 or above, that should be a clear signal that it's trying to reverse. Now it has to get above the 50 simple moving average at 1537 for the chart to officially be on reversal mode for us. And so it's similar to back here. As you can see on the 20th, it got above the green line, and that's when it started cooking, and there was a nice trade in here between 1550 and 1590. Now it's always a risk to hold when candles are forming below the middle Bollinger Band. Once it gets above that 50, that's when you can get some upside. Now, if it does get above the 50, it would have to get above the 300 simple moving average, or it could stall out like it did last time. Okay, let's look at Apple here. So you have Apple, yeah, and then another thing to keep in mind is you have 3 days down on in a row on Amazon, and then you have Facebook over here with you know, the 2 days down. Okay, and now look at Apple. Okay, so Apple is down 6 days in a row. Okay, so you have a 6 days in a row down for Apple. That doesn't happen very often. You know, it's not very often that you get this kind of pullback on a quality stock like Apple. You notice that Fasto closed at 0. I mean, it doesn't get more oversold than 0, right? So it's super oversold. RSI is still at 33, so it needs to stay above that 30 level. Now back here when it had some problems in January and February and it pulled back, you can see Fasto got below 20 and it stayed below. You know, you want to see that black line cross the red line to the upside and then get back above 20 to signal the chart is heating up. A bullish doji star reversal pattern formed here, and that pattern was not confirmed. Now, if you notice here, there's been 1, 2, 3 gap downs in a row. So in my mind, bullish 3 gap downs reversal pattern has formed as well now. And so after having, you know, 3 gap downs in a row, this and Fasto at 0, this is signaling this is an extreme move to the downside. Another signal that it's an extreme move downside is Thursday's real candle body formed below the lower Bollinger Band, and then notice that Friday's real candle body formed below the lower Bollinger Band as well. With the lower Bollinger Band is way up here at 168.50. And so that close $4 below that level, that's really, or $3.50 below that's a big signal that it's very oversold. Okay, now if it does drop below, or the key level that it should have a technical bounce off of if tested would be this 200-day simple moving average at 162. Now that level has to hold. That was the level that it found support back here in the February drop. If that level broke, then you would be seeing a drop all the way down to the 300-day simple moving average at 154. Okay, now in order to get this reversal going, it has to break above the pink line. That's at 160.28. That's EMA4. And so once you get a close above 169.28, that should be the signal that this previous downtrend is starting to reverse, and the bulls are starting to heat up. Similar to back here, you know, it got above EMA4, and then it started the reversal. And so that we're looking for signs now that the buyers have stepped up and they're starting to nibble here. And one clue would be a close above the EMA4. As long as the EMA4 remains resistance on the daily chart, Apple will be a risk to hold long. If you look here on the 15-minute chart for Apple, you can see here it's been riding this green line lower. This is the 50 simple moving average, and so yeah, you can see it turned into resistance back here on the 18th. You know, it hit it on the 20th and couldn't get above. You know, it tried again on the 22nd and it couldn't get above. It tried again on the 23rd and it couldn't get above. So keep an eye on this level. All right, it's currently at 169.28. Once you finally see the 50 simple moving average on the 15-minute chart turn into support, that should be your clear signal. Okay, yeah, it's reversing and now it wants to head higher. You know, you could get faked out if you load on the break above. It has to stay above, and then you use your 50 simple moving average as your stop loss level. Now you know, we were trying to time this bounce, and it would have paid to have just had patience and waited for the break above, as opposed to catching the falling knife. And so that is the big thing. You know, you might miss out on not nailing the bottom, right? But if you wait for that break above the 50 simple moving average, you know, you've mitigated a lot of the downside risk. So sometimes it doesn't pay to try to nail that low of day entry point, as opposed to having patience and go for the safer trade and wait for that break above resistance, and as long as it's holding, then keep riding, because you could get a trade between the 50 simple moving average and then up here to the 300 simple moving average at 176, and so that could be a $7 move. Now you would have missed a $4 move between 165 and 169. Let's say it does bounce and you don't load down here and you wait for the break above, but you are also you're not jumping the gun too early. So just that's something to keep in mind. Or you know, and also, you know, you could just trade between the low here and back up to that 50 simple moving average. You know, you can load on the break above EMA4 at 166, and then if it gets back up here and it either stalls out at the middle Bollinger Band at 168, you exit, or if it stalls out at the 50 simple moving average at 169, you exit. Okay, let's look at NFLX. Okay, so Netflix is at extreme oversold levels on Fasto as well. you can see RSI is still at 50. Now, the difference back here is, you know, once again, it's the August anomaly. You know, when it got pegged below 20 and stayed below, you can see down here, Fasto is down at 1.73 right now, and it's only hit that level a few times in the last year. And you can see here when it hit that level in July, all right, a huge rally followed, and then when it hit in October, you know, it found that 50 simple moving average support level, and a nice run followed, and then the anomaly is August. Okay, so it broke down in August, and it stayed pegged below for a couple weeks below the 20 on Fasto, and you had sideways action. Okay, so is Netflix going to go sideways on us here, sideways to down, or is Netflix going to pop? You know, because you know, 2 out of the 3 times there was a nice pop and a really strong recovery, and then one time in August, you know, the FANG stock stayed pegged, and so that is the risk here. You know, keep in mind it is a holiday shortened trading week, and so there's no trading on Friday, so options contracts are going to be expiring on Thursday, and the market makers have been brutal lately with the options, and you know, they're trying to you know, they you know, who knows, you know, they may try to make it so that nobody wins and just go sideways. And so basically on the middle Bollinger Band here at 311, at 311.50, that's the big level to break. If you see it back above 311.50, that's going to be your signal. Okay, yeah, it's back and getting the uptrend going. If 311 remains resistance, okay, that's going to signal downside risk. That's going to signal the start of a new downtrend. All right, like the middle Bollinger Band held when it tested in February and it got right back above. The downside risk is Netflix drops all the way down to 278.95. That's the 50-day simple moving average, and that would be tested if it, you know, that would be the August scenario. Okay, so it broke below the middle Bollinger Band in August and went all the way down to the 50-day simple moving average. That would be the worst case scenario here, and then you know, then maybe it would bounce for during earnings. You know, so that is the downside risk. If it gets back above 311, then it could get the uptrend going again. If you look at the Netflix 15-minute chart, you can see here they are driving it lower. You know, making consistently lower lows. All right, so the bears have been in control for multiple days now. They tried to get a bounce over here and it failed. It hit that 200 and 300 simple moving averages and they turned into resistance. All right, and so the trade here could be, if it gets a reversal, if you get a break above 302, that's EMA4, that signals it's heating up, and then above the middle Bollinger Band at 305, we'll call it 305, then that's the signal. Okay, yeah, this could get going. Notice how the previous attempts above the middle Bollinger Band in the last 3 days, trading days, did not start uptrends. It got above the middle Bollinger Band, and each time it signaled the top. So when it gets above the EMA4, if it goes up to 305 and that level fails to turn into support and it drops back below, that signals continuation of the trend from last week. All right, that's going to be the red flag. Now the bullish change in trend will be 2 white candles above the middle Bollinger Band, because if you look here, each one of these white candles above, you know, I guess that one was slightly above, but if it can form multiple white candles above the middle Bollinger Band tomorrow, that would be a clear signal. Okay, yeah, this is a change in trend from last week. And then the big signal is going to be a break above the 50 simple moving average at 307.24. That's also lined up with the top of the channel. So a break above that level should be your signal. Okay, yeah, Netflix is really bouncing. This is for real. I'm going to take a ride up here to that 100 simple moving average at 312. You notice there is a gap up here. So you've got a gap, a small gap on the chart. And so Netflix could come up and fill this gap. Let's see, yeah, between low of day or high of day on the 22nd and low of day on the 21st. So if it ran up there to that 315 level, you know, the high 314s, that would fill the gap above. Yeah, so you look at the big volume on Friday. There was obviously some people that were loading, trying to play the bounce, and so like I said, the major sell-off was retail. All right, so retail, you know, and keep in mind that this whole pullback started after retail entered heavy, right? So retail loaded big time like they did in February, and so this big February thing happened when there was huge investment by retail traders, investors, and so they jumped into the market, and then the market, you know, they just took it lower and wiped a lot of people out that jumped in and chased, and so there was this huge huge 2 weeks ago. There was a huge inflow of money that came in again, and what did they do? They dropped it down again. And so when you see a huge inflow of retail money into the market, take warning that that's not a good sign. That's a sign that they're probably going to drop it, because the last 2 times that that's happened, they've burned the retail trader. And so what happened on Friday? The retail traders sold 1.8 billion on the close. So what does that tell you? Maybe they're going to bounce it, right? Because they want to burn the retail trader. The retail traders all sold at the bottom, right? They loaded up here, and they're like, "Oh my God!" And then it dropped all the way down, and then they all exit at the bottom, and then the markets bounce, and then they get burned again. I mean, that is. I'm not saying that's going to happen, but that's just one possible scenario. You know, it's always the retail trader getting burned in the stock market. And so basically, just keep an eye on this level, the red line. It's all about the red line. Notice how it held on Friday. I mean, we're talking about Google with 6 red candles in a row, 6 red volume bars in a row. If you go back in December, now it did have the 8 red in a row. And so that was a big pullback. You can see what happened after that multi-day pullback back in December. There was a nice bounce that followed. And so is that going to happen again? You have the multi-day bounce, pullback and a nice bounce. Well, the thing is if this 200-day simple moving average at 1023 fails to hold, then it could drop all the way down to the 300 simple moving average at 976. That is the downside risk. Okay, so this is a must-hold level. If it breaks, you're talking about Google below 1,000, hitting 976. Friday's candle did close well below that lower Bollinger Band. The 2 previous times that happened recently was back in February, and each of these closes below the lower Bollinger Band had bounces right away. And so if it bounces back, what you want to see is a break above EMA 4 at 1061. That's been the resistance level on the way down. If it can get a close above that, then it could run up to that 100-day simple moving average at 1086. All right, and that's lined up with EMA 8 at 1085. So this is a big level. If you look down here, you know, like I said, when Fasto hits this level, you can see down here in February there was a big bounce. Okay, Fasto hit this level. It's at 1.1 right now. Extreme oversold levels. The last time it hit that level in December, it signaled a big bounce. August was the anomaly. It got below, but you could see, you could see it was traded sideways, and that's what could possibly happen here. We could get sideways where everybody gets flushed out. And then if you look here at July, when it came down, and you had a similar level, pretty much the exact same level on Fasto, there was a sharp V-shaped recovery. So are we going to go V-shape? You know, which happens most of the time, or is this going sideways? And so only time will tell. But you know, anytime you get a stock like Google that's down 6 days in a row, in my mind, that is a good bounce play setup. Okay, so it should be good for a technical bounce play on. I would think it would bounce on Monday, but you know, the markets have been crazy lately, and they've been hard to forecast. So you have to follow the charts. But this looks, you know, it looks primed for a bounce. Yeah, it would be very, very bearish if they drove it down another day and they tested that 300-day simple moving average. And we all know that it could happen. It very well could happen. And so the safest thing to do if you're trying to play the bounce is wait for a break above that 50-day or 50 simple moving average here at 1056. And if that turns into support, then that could get the reversal going. You could see it got above that level on the 21st, and we thought it was happening. Okay, it looked like it was going to get the reversal going, but it stalled out at the 100 simple moving average and pulled back. Okay, once it got back below that 50 simple moving average, you have to exit, because if you hold, look what happens. You know, it signals downside risk. So if you load on the break above the 50 simple moving average on the 15-minute chart, you have to use it as your stop loss level. If you don't, you could end up suffering if there is a pullback. It's only a good bullish setup if the candles are forming above the middle Bollinger Band currently at 1046 and above the 50 simple moving average at 1056. If they get above and they're riding, then it's good. If they come up and they hit the 100 simple moving average at 1076 and stall out, that's a red flag, right? And then if they drop back below the 50, that's your signal to exit. Okay, if it closes above that 100 simple moving average, then you're looking for a run up to the 200 simple moving average at 11 and to test this high from back here on the 21st. Okay, so that's lined up here with that 200 simple moving average, and then the big level is going to be the 300 simple moving average. Notice that there's a gap up here, between high of day on the 19th and low of day on the 16th, and so we could see a gap fill situation. We could see a snapback rally and run back up to fill that gap, hit the 300 simple moving average, fill the gap, and then it could still pull back. So it would have to get above that top of the gap, or that gap level, and then get above the 300 simple moving average to get that big reversal going. But as you can see, there's $100 between the current share price and that 300 simple moving average. So there is a lot of money potentially to be made on a bounce. Okay, so yeah, this is Google, Netflix, Apple, Amazon, and Facebook. The charts are looking like they're overdue for a bounce. We'll have to see what happens. Right now, Apple and Google are looking the most beat up and set up for the bounce, all right, because they have the charts with the multiple red candles in a row, and then with Facebook down here, well below that 300 simple moving average. Keep an eye on that 155 for a possible gap fill and bounce. And then Amazon, this has got to hold that 50 simple moving average at 1554. And then Netflix, you want to see that back above the middle Bollinger Band. It should be able to get back above. If it doesn't, that's going to be a major red flag. Okay, thanks for viewing this video. Come check out our chat. I'll post the link below the YouTube video. Thanks.